Welcome to this lesson about the SIE exam. Today, we are going to be talking about regulation. That's a really large part of your job and a large part of the test that you're going to need to know. So, we'll talk about all sorts of different kinds of things. And at the end, I will give you a chance for you to quiz yourself to make sure that you are ready to move on to the next lesson. All right, so let's go ahead and get started. So we're going to start by talking about financial institutions and regulatory bodies. So first we have the SEC. This is probably one that you've heard of. It's the Securities and Exchange Commission. This is usually called the SEC. It's a government agency responsible for enforcing federal securities laws, but it also proposes new securities rules if they think that there's something that's missing. And they also regulate the securities industry, including the nation's stock and options exchanges. The SEC's primary goal is to protect investors, but also to maintain a fair and orderly and efficient market, and to facilitate capital formation. So they've got a lot of different hats they wear, and it's really an organization that is crucial to everything moving smoothly. All right, another one that we mentioned before here in the introductory lessons is the Financial Industry Regulatory Authority, or FINRA. So FINRA, unlike the SEC, is a non-governmental organization. So that's an important distinction to draw. The SEC is a government agency. FINRA is not a government agency, but it acts as a self-regulatory organization, or SRO, that oversees U.S. broker-dealers. Its main functions include licensing agents, giving licenses, but also then taking it away if there's a problem, also helping people renew their licenses when it's time for that. They also enforce rules governing the activities of broker-dealers. They arbitrate disputes. So when there's a problem between maybe a member firm and a broker-dealer, or a broker-dealer and a client, they can step in and arbitrate. And they also promote market transparency. So FINRA does operate under the supervision of the SEC. So in a roundabout way, there's still some government influence there, but just remember that the SEC is strictly a government agency while FINRA is non-governmental. The next one I want to talk about is the Municipal Securities Rulemaking Board, or the MSRB. So the MSRB is an SRO, that's that self-regulatory organization that regulates the municipal securities market. Its primary mission is to protect investors, municipal entities, and the public interest by promoting a fair and efficient municipal market. So it achieves this by establishing rules for securities firms and banks that are involved in underwriting, trading, and selling municipal bonds. So we'll talk a little bit more later about municipal bonds, but just think of them as, okay, the bonds for that a city or a state or government issues. They're municipal. So they've got their own regulatory agency in the MSRB. All right, the next one that's also really important, and that we'll talk about quite a bit throughout the course, is the Federal Reserve System. Now, the Federal Reserve is often just referred to as the Fed. So if you're watching the news, you might hear the anchor say, oh, the Fed decided to slash interest rates today, or the Fed
rated Hermes STSTRLGPRN5 didn't.
If you just hear somebody refer to it as the Fed, that's what they're talking about. So it's the central bank of the United States. It was established to provide the country with a safe, flexible, and stable monetary and fiscal system. Its functions include conducting national monetary policy, supervising and regulating banks, maintaining financial stability, and providing banking services to depository institutions, the U.S. government, and other foreign official institutions. So it has a lot of different roles. as well. One of its main goals is to try to control inflation. If there's too much money in the system, they try to get some of that money out, raising interest rates, take that so money flows out of the system. And if there's not enough money in the system, they lower rates to encourage more money to flow into the system, that sort of thing. So that's the Federal Reserve, the central bank of the United States. So let's talk a little bit more about how the Federal Reserve came to be and some of the components of the Federal Reserve, because that's a really important part of understanding securities. So,
Could you try again?
let's first talk about the Federal Reserve Act. So this was a piece of legislation that created the Federal Reserve. The Federal Reserve Act was passed in 1913 in response to financial panics, particularly the Panic of 1907. Its purpose was to create a central banking system that could manage monetary policy, regulate banks, and provide a safer, more stable monetary and financial system. And sometimes it has succeeded at that, and sometimes it has not. So if you know your history, 1913 was still a few years before the Great Depression that happened in 1929 onward. So, sometimes it worked, sometimes it didn't. But it still is in existence today, and it's still trying to regulate the United States financial systems. So there are different components of the Federal Reserve. It's made up of different entities. It's not all just one entity. It has a board of governors, and these governors oversee the Federal Reserve System. They're in charge of setting the monetary policy and regulating the banks under their jurisdiction. So that's like a board of directors. They call it the board of governors. We have the Federal Open Market Committee, or the FOMC, and that manages the country's money supply and the short-term interest rates. So that's another part of it. We also then have the Federal Reserve Banks. And now these are a set of 12 regional banks that carry out central banking functions in their respective districts. So they just split the country up into 12 regions. And these regional banks are like branches of the Federal Reserve. So they help with regulation in their district. And then we have member banks. So these are national and state banks that are members of the Federal Reserve System. And they hold their stock in their district's Federal Reserve Bank. So a lot of banks that you're going to deal with in the United States are members of the Federal Reserve, as that gives them some benefits that non-member banks simply won't have. So you've heard me mention a few times this term, monetary policy. It's something that the Board of Governors sets from month to month and from year to year. So this refers to the actions undertaken by a central bank, such as the Federal Reserve, to influence the availability and cost of money and credit to help promote national economic goals. This usually means managing interest rates and regulating the money supply. The interest rate is basically how cheap or expensive is it to borrow money. And if it's more expensive, the rates go up, then fewer people are going to be willing to pay that, and less borrowing will be going on. However, if that goes down, then, hey, people are saying this is a good time to invest. I want to go ahead and invest now while the rates are good. So then more people buy into the system. So that's monetary policy. They can use that to try to keep the economy in a good place. So in addition to the Federal Reserve, they work closely with the Department of the Treasury. So this is a little different, though. It's a cabinet-level department of the U.S. government. So it's part of the president's cabinet, part of the executive branch that's responsible for managing federal finances, collecting taxes, issuing currency, managing government accounts and public debt, and advising on fiscal policy. So they might advise on policy, but it's actually the Federal Reserve who makes the fiscal policy real. In addition to managing the country's monetary policy, The Federal Reserve also regulates banks and protects the credit rights of consumers. They maintain the stability of the federal system, the federal financial system, and provide financial services to depository institutions, the U.S. government, and other foreign institutions. So when you go to the bank, you might have noticed sometimes that it says member FDIC. So FDIC stands for the Federal Deposit Insurance Corporation. So the FDIC is a U.S. government corporation that provides deposit insurance to depositors in U.S. commercial banks and savings institutions. The FDIC insurance protects against the loss of deposits in accounts such as checking and savings accounts. Now, it's not unlimited, of course. You can't just insure somebody for unlimited money. It does insure each account up to $250,000 per depositor per insured bank for each account ownership category. Investments in stocks, bonds, mutual funds, life insurance policies, annuities, and municipal securities, however, are not covered by FDIC insurance. It's just those regular run-of-the-mill checking and savings accounts. So if the bank were to go under, the FDIC could then step in and say, all right, how much did you have in the bank? And if it's less than $250,000, then that person would get reimbursed for that. So that's the FDIC. Another thing you're going to need to know are what are called blue sky laws. Now, blue sky laws are state regulations that govern the offering and sale of securities to protect the public from fraud. These laws require sellers of new issues to register their offerings and provide financial details, allowing potential investors to base their judgments on solid data. So this means that if you have an offering, that you'll have to provide a prospectus where you detail all the different things that a potential buyer might want to know, so that they know exactly what they're investing in, what the risks are, what the possible rate of return might be, what the historical performance has been, and so on and so forth. But what requires this, those are these blue sky laws. We also have the Uniform Securities Act. So this is a model statute designed to guide each state in drafting its securities laws. The act aims to protect investors from fraud by regulating the issuance and sale of securities within a state. We also have the National Securities Markets Improvement Act of 1996, the NSMIA. It's a federal piece of legislation that was designed to simplify the regulation of securities by clarifying and coordinating their respective roles of state and federal authorities. It helps the state-level authorities and the federal-level authorities work better together. It preempts states from regulating certain aspects of securities and issuers that fall under federal oversight. So if the federal government is already taking care of something, then it says, okay, then the state government doesn't need to take care of that too. So they don't need to double up, so to speak. Next, we have the North American Securities Administrators Association, or the NASAA. Now, the NASAA is an organization of securities regulators from the U.S., Canada, and Mexico, whose aim is to protect investors from fraud. So it's an international organization instead. NASAA members license firms and their agents, investigate violations, and file enforcement actions. So we also need to know about the Securities Act of 1933. So this act, often called the Truth in Securities Law, requires that investors receive financial and other significant information concerning securities being offered for public sale. It aims to prohibit deceit, misrepresentation, and other fraud in the sale of securities. Its primary goal is to ensure that investors have all the necessary information to make informed decisions about securities investments. All right, so that's a lot of content. Let's go ahead and let you quiz yourself to see how well you're doing. And if you feel good about the content, you can go ahead and move on. All right, so my first question is, what is the primary purpose of the Federal Reserve's monetary policy? So the primary purpose is to manage the economy's money supply and to tweak interest rates up or down to achieve economic goals such as maximum employment, stable prices, low inflation, and moderate long-term interest rates. So that's what the Federal Reserve uses monetary policy for. My next question is, how does FINRA contribute to market integrity? So FINRA contributes by regulating broker-dealers, enforcing trading rules, licensing agents, arbitrating disputes, and promoting market transparency. So those are all things. So if you got a few of those, great. So FINRA does a lot of different things, wears lots of hats. That's why it's so important. My next question is, what type of protection does the FDIC provide its customers? So the FDIC insures deposits made in banks up to $250,000 per depositor per insured bank for each account ownership category. So these protect deposits in case of a bank failure. So if the bank were to go under, these people would not lose their money. Unfortunately, if it's more than $250,000, unfortunately, they would be out that money. My next question is, describe the role of the MSRB in the municipal securities market. What did they do? So the MSRB regulates the municipal securities market in a few different ways. They set rules for security firms and banks that are involved in underwriting, trading and selling municipal bonds, and they do this to ensure fairness and transparency. My next question is, why were blue sky laws implemented? So blue sky laws were implemented to protect investors from fraudulent sales practices and security schemes by requiring the registration of security offerings and full disclosure of financial details. So help people from being defrauded. Definitely don't want that. My next question is, what does the Securities Act of 1933 require from issuers of securities? So it requires issuers to provide accurate and complete information about themselves and the securities that they offer. And remember when I talked about a prospectus that has all that information in it that helps prevent fraud and deceit. So how does the National Security Markets Improvement Act of 1996 affect state securities regulators? So remember, this is the one that has to do with both state and federal agencies. So how does this act work? So it preempts the state from regulating certain aspects of securities and issuers that fall under federal oversight. And this is aiming to streamline securities regulation and reduce redundancy. So if one level is taking care of it, the other level doesn't have to. So it just makes things more efficient. The next question is, what is the importance of the Federal Reserve Act of 1913? So the act itself established the Federal Reserve System as the central bank in the United States. Okay, my next question is, how is the Federal Reserve different from the Department of the Treasury? So what does the Department of the Treasury do that the Federal Reserve does not? So the Treasury manages the government's revenue and money by handling federal finances, issuing currency, so that's not something the Federal Reserve does, they just hold the currency, managing government accounts and public debt, and just advising on fiscal policy. It's the Federal Reserve actually makes the fiscal policy and carries that out, but the Department of the Treasury just advises. So they're similar. They've got similar goals and a lot of similar things that they do, but a little different. My next question is, how does the Federal Reserve's decision to change interest rates affect the economy. We talked about a few different ways that this is the case. So changes in interest rates affect the borrowing costs for individuals and businesses. So when they want to borrow money for investment or buying a home or starting a business or whatever they want to do with the money. And so this will influence spending, investment, and overall economic activity. Lower rates typically stimulate economic growth, while higher rates can slow it down to control inflation. So if you're just going super duper fast all the time, then you might inflate the currency. You've got too many dollars chasing after too few goods, as they say. What does the SIE exam stand for? So the SIE exam is the Securities Industry Essentials exam. And that's really important if you want to pursue a career in the securities industry. All right, my next question is, what does FINRA stand for? Okay, so FINRA is the Financial Industry Regulatory Authority, and it's a non-governmental organization. So what exactly, though, does FINRA do? We know it's a regulatory organization. What does it regulate, and who is it supposed to protect? So it regulates basically the entire securities industry. It's regulating brokerage firms and exchange markets, and it's protecting America's investors to make sure that these brokerages and these markets are operating fairly and honestly. So in order to do that, it provides licensure, it writes rules, it enforces the rules, of course, and so on. My next question is, what do you have to do after you pass the SIE exam in order to start your career in the securities exchange industry? Like I mentioned before, it's not the end of the road. You have to be associated with a FINRA member firm who then sponsors you to take more specific exams that are more specialized. And once you've done that, then you can start your career in earnest once you've got your licensure. But yeah, just remember the SIE is really just the beginning, and it's not the end of the road. My next question is, what are some good strategies to help you prepare for a high-stakes test? We talked about a few of these, so see how many you can remember. So as I mentioned, there are a lot of these. But here's just a few. Creating a study plan that covers all of the exam topics. Making a plan to study over a longer period of time so that you can use spaced practice instead of just cramming at the end. Using various study materials, this is textbooks and online courses, practice exams, and so forth. Understanding the format of the exam and familiarizing yourself with the kinds of questions you're going to be asked. Those are all really important things. And it also helps to join a study group or to find at least a study partner who can help you get through the toughest stuff. And then finally, what are some other strategies that you need to do on the day of the exam in order to make sure that you have an overall positive experience? There are a lot of different things you can do here. But for example, leaving with plenty of time, that's a big one. Making sure that you're not just leaving with barely enough time. So just give yourself a buffer. Bringing all of the required materials there. So making sure that you don't forget your ID at home, for example. That could be a big problem. Making sure that you dress comfortably. Managing your time effectively on the exam itself. Reading each question carefully. And using the process of elimination if you're having trouble. And if you find yourself getting a little too worked up during the exam, the time to take a pause Take a few deep breaths and calm down before you continue your exam. How did you do? If you did well, it might be time for you to go ahead and go on to the next lesson. And if not, no worries, just go back and review before moving on to the next lesson. And that's all for our lesson for today. Thank you very much for listening.